Hey everyone, welcome back to We Are Cosmic, the place where we dive deep into the universe of finance and cryptocurrency in ways that are simple and actionable. If you're new here, make sure you hit that subscribe button because we break down complex market movements into easy to understand insights that anyone can follow. Today we've got something really exciting to talk about. Gold and silver have just done something we haven't seen in decades. And it's creating a massive opportunity for traders like you and me. Let me paint the picture for you. In January 2026, gold skyrocketed from around $4,300 all the way up to nearly $5,600. That's a 29.5% gain in just 1 month. Then, almost as quickly, it dropped back below $4,800, wiping out around $6 trillion in market value. Yes, $6 trillion, that's not a small number. That's a massive shift in wealth happening in just a few days. And silver almost hit $120 before crashing back down to $82. These kinds of moves are not random or opinion-based. They're driven by how quickly traders can access markets and act on opportunities. Timing and speed matter more than ever. Now, here's the key. Not everyone has equal access to these markets. Traditional systems are slow, complicated, and require multiple accounts, brokers, and long settlement times. This creates friction and makes it hard for individual traders to react fast. But the world is changing. Platforms like BitGet-TradeFi are bridging the gap between crypto-native traders and traditional markets like gold, silver, forex, and indices. This means that you can now trade these high-value assets with the same speed, flexibility, and ease as trading cryptocurrencies. That's why today's discussion is important. We're not just talking about gold and silver price movements, we're talking about how you can position yourself to take advantage of these explosive opportunities. Before we dive deeper, think about this for a second. Gold and silver have always been seen as safe haven assets. People invest in them to protect against inflation, global economic instability, and currency devaluation. But when you combine traditional asset strength with crypto-native speed and accessibility, the game changes completely. Traders who adapt quickly can profit from short-term price swings that happen in days or even hours instead of months or years. That's the future of trading, a blend of traditional stability and crypto agility. And that's exactly what we explore here on We Are Cosmic, making high-level finance accessible, understandable, and actionable for anyone watching. Whether you're a beginner in crypto, a seasoned trader, or someone who just wants to understand what's moving markets right now, this channel is for you. Today, we'll go step by step through why gold and silver are pumping, how platforms like BitGet-TradeFi are revolutionizing access, and why central bank actions are creating a once-in-a-generation trading environment. By the end of this video, you'll understand not just the what, but the why and how, so you can make informed decisions without feeling overwhelmed. So sit tight, grab your coffee, and get ready because the next few minutes are going to be packed with insights that can help you trade smarter. If you've ever wondered why gold moves so fast or why certain traders seem to make money on every market swing, this video is your roadmap. We'll break it all down in simple, step-by-step language. No jargon, no confusing charts that you can't follow. Just clear analysis that you can take and use right away. All right, guys, let's dive deeper into what just happened with gold and silver because understanding these moves is key to seeing real trading opportunities. In January 2026, gold surged from about $4,300 to nearly $5,600. That's almost a 30% increase in just 1 month. Think about that. In traditional markets, it usually takes years for assets to move that much. And then, almost immediately after, it fell back below $4,800. That's a huge swing in a very short period. What this tells us is that volatility is back in full force, and for traders, volatility is an opportunity, not something to fear. Silver experienced a similar story. It shot up to nearly $120 before dropping down to $82. Silver has always been a more volatile cousin of gold, but these moves are extreme, even by silver's standards. The reason for these fluctuations isn't random guessing or market hype. It's about market access and timing. Traders who can act quickly, execute orders instantly, and use leverage effectively are the ones who profit in these environments. Those who are slow or stuck in traditional systems can miss out entirely, which is why platforms designed for fast execution are so critical. Now let's talk about why these metals move so aggressively. One key factor is central bank activity. In 2025 alone, central banks bought 863 tons of gold. the fourth largest accumulation on record. To put this in perspective, this number is 82% higher than the average yearly purchases from 2010 to 2021. Countries like Poland, Kazakhstan, Brazil, China, and Indonesia are actively building reserves. This isn't just a random act of buying. It's part of a global trend called de-dollarization, where countries reduce their reliance on the US dollar in reserves. When central banks buy in such large quantities, it creates both short-term spikes and long-term support for prices. Traders who understand this can anticipate swings and plan their entries and exits effectively. Another factor driving short-term moves is the ease of access to these assets through crypto-native platforms like BitGet TradeFi. Historically, buying gold or silver meant dealing with specialized brokers, separate accounts, and settlement delays. If something important happened in the market, by the time your money was available, the opportunity might be gone. Now, crypto-native traders can access gold, silver, forex, and indices in a single platform, often using USDT as a base currency. This means instant execution, faster reactions to news, and the ability to capitalize on rapid swings that used to be impossible in traditional systems. Let's not forget leverage and short-term trading advantages. Gold swing trades, on average, last only about 5.3 days according to market studies. Traders can use leverage to control larger positions without tying up significant capital. Short-term trades also help avoid long-term risks like inflation, interest rate changes, or slow economic growth. High liquidity in global gold markets, like COMEX gold futures averaging 180,000 contracts daily, ensures traders can enter and exit positions quickly, minimizing price slippage. This combination of speed, flexibility, and liquidity is why the current market environment is so attractive. Finally, it's important to understand market psychology. When gold and silver move this aggressively, retail and institutional traders alike react to both fear and opportunity. Some sell out of panic, while others buy aggressively. For smart traders, these extremes create opportunities to profit on both the upside and downside. By recognizing patterns, understanding the driving forces, and acting quickly, you can navigate these swings and maximize potential gains. So, in short, what's happening with gold and silver isn't just random chaos. It's a combination of central bank actions, increased access through modern platforms, high liquidity, and short-term volatility. If you can understand these factors and react quickly, there's huge potential to profit from these swings, something traditional investors often miss. All right, guys, now that we understand the massive swings in gold and silver, let's talk about how you can actually access these opportunities in real time. Traditionally, trading gold, silver, forex, or other commodities has been complicated. You'd need multiple accounts, specialized brokers, different currencies, and settlement times that could take days. If a major market event happened overnight, you might have missed it entirely. That's where BitGet TradeFi comes in. It's changing the game for crypto-native traders who want access to traditional markets without the old friction. BitGet TradeFi is essentially a crypto-native platform expanding into traditional finance. That means you can trade gold, silver, forex, and indices in the same environment you already trade crypto. The platform is designed to feel familiar for crypto traders with instant execution, USDT-based access, and high flexibility, even though the underlying assets are traditional. This is huge because traders no longer need to juggle multiple systems or accounts to take advantage of opportunities. Everything happens in one ecosystem. One of the biggest advantages is speed and access. Let's break it down. In traditional systems, opening an account could take 1 to 3 days. Deposits and withdrawals can also take days, which is a huge problem if you want to act on sudden market movements. On BitGet TradeFi, these barriers disappear. You use your crypto exchange account, fund it instantly, and can trade immediately. In a volatile market, being able to act seconds faster than other traders can make a huge difference. This is exactly what makes crypto-native platforms like BitGet TradeFi so powerful for metals trading. Another key feature is leverage. Traditional brokers might offer 5x to 20x leverage, but on BitGet TradeFi, you can go up to 500x leverage. This doesn't mean you should recklessly risk it all, but for smart traders, it opens opportunities to control larger positions with relatively small capital. Combined with high liquidity in gold and silver markets, this makes entering and exiting trades fast and efficient without worrying about price slippage. BitGet TradeFi also allows for short-term event-driven trading. Instead of holding gold physically or waiting months for price appreciation, you can use CFDs, contracts for difference, to speculate on short-term price movements. This means you can profit whether the market goes up or down as long as you understand the trend and act quickly. For crypto traders, this is familiar territory because digital assets are inherently volatile and require fast decision making. The platform also brings cross-market integration. You can manage your crypto, gold, silver, forex, and indices from a single balance using USDT. No need to convert between currencies or deal with multiple accounts. It's a seamless experience that feels just like trading crypto, but now you have access to a much wider set of markets. This is revolutionary because it removes traditional barriers and lets you react to global events instantly. Interest rate changes, geopolitical developments, or sudden central bank actions, all from one dashboard. Finally, let's talk about risk management and stability. With BitGet TradeFi, you can trim positions quickly, manage exposure, and use tools designed for professional traders. Because positions are short-term and flexible, you reduce long-term risks like inflation or interest rate fluctuations. At the same time, you maintain exposure to assets with strong fundamentals, like gold, which historically preserves wealth and purchasing power. In summary, BitGet TradeFi is bridging two worlds, the speed and flexibility of crypto trading and the stability and value of traditional markets. For traders who understand volatility and timing, this platform is a game changer. It lets you react faster, trade smarter, and access opportunities that were previously limited to institutional traders. All right, guys, now that we know how to access gold, silver, and other assets on BitGet TradeFi, let's get into the practical side, how to actually trade them for profit. One of the most exciting things about the current market is the short-term volatility. Gold and silver are moving fast, which creates opportunities to buy low and sell high within days rather than months or years. For crypto traders, this is familiar territory. Reacting quickly to price swings is part of your daily routine. Let's start with swing trading. Swing trading is all about taking advantage of short-term price movements. On average, profitable gold swing trades last about 5.3 days, according to market analysis. That's not long at all, and it means you don't need a lot of capital to start seeing results. By focusing on short-term trades, you can minimize long-term risks like inflation, interest rate changes, or global economic slowdowns while still capitalizing on price movements. This is exactly why platforms like BitGet TradeFi, which allow fast, flexible, and leveraged trading, are perfect for this style. Speaking of leverage, it's a tool that amplifies your potential profits, but it also increases risk. On BitGet TradeFi, you can use up to 500x leverage, which is far beyond what traditional brokers offer. Let me break this down. If you spot a strong trend in gold and use leverage, you can control a much larger position than your initial investment would normally allow. However, you have to manage risk carefully. Always set stop losses and know your position size relative to your account balance. Leverage is a double-edged sword, but in the hands of disciplined traders, it can significantly increase short-term gains. Another strategy to consider is event-driven trading. Gold and silver often react to real-world events, interest rate announcements, geopolitical tensions, or central bank gold purchases. For example, central banks bought 863 tons of gold in 2025, which created both long-term support and short-term spikes. Crypto-native traders are already used to acting quickly on news, and with BitGet TradeFi, you can trade these moves instantly, without waiting for traditional settlement systems. This immediacy is what separates successful traders from those who miss the opportunity. Risk management is another crucial component. Short-term trades allow you to reduce exposure and adjust positions rapidly. If the market suddenly shifts, you can trim your position or exit entirely. This is much safer than holding physical gold for months or years and hoping the price goes up. You also benefit from high liquidity, particularly in gold futures, which ensures you can enter and exit trades without significant price slippage. Essentially, your trades can react as fast as the market itself. Finally, let's talk about accessibility and capital efficiency. Short-term trading with leveraged positions requires less initial capital than traditional long-term investing. For smaller accounts or new traders, this is a huge advantage. You can get exposure to valuable assets like gold and silver without tying up tens of thousands of dollars. Combine this with instant transfers and a single USDT balance across multiple markets, and you have a powerful setup for consistent, disciplined trading. All right, guys, now we're moving into the bigger picture. What's driving gold and silver over the long term, and why central banks are playing such a huge role? Understanding these trends can give you a strategic edge as a trader or investor. While short-term swings are exciting, knowing why these metals move over months or years helps you make smarter decisions. First, let's talk about central banks. In 2025 alone, central banks bought 863 tons of gold, which is the fourth largest accumulation in recorded history. To give some context, that's 82% higher than the average annual purchases from 2010 to 2021. Countries like Poland, Kazakhstan, Brazil, China, Uzbekistan, Czech Republic, and Indonesia are all actively increasing their reserves. Some of these purchases are public, but around 57% of central bank buying in 2025 was unreported, meaning institutions are quietly accumulating gold without making headlines. This hidden demand is a massive factor for the market because it supports prices even when public sentiment seems weak. Why are central banks buying so aggressively? One major reason is de-dollarization. Many countries are reducing their reliance on US dollar reserves to protect themselves from global political and financial risks. For example, after Russian assets were frozen in 2022 due to sanctions, countries realized the importance of diversifying away from the dollar. Gold becomes the obvious choice. It's stable, universally recognized, and not tied to any single government's currency. This is why central bank purchases aren't just random. They're part of a strategic move to safeguard national wealth and reduce currency risk. The result of this buying trend is long-term price support for gold. Analysts at JP Morgan forecast gold could reach $6,300 per ounce by the end of 2026 and potentially $8,000 per ounce by 2030 if private investors also increase allocation. This isn't speculation, it's based on global trends in supply, demand, and monetary policy. Central banks are effectively acting as major buyers, reducing the amount of gold available for other investors, which naturally pushes prices higher over time. Another important factor is geopolitical and economic instability. Gold and silver are safe haven assets, which means that during times of uncertainty, wars, sanctions, inflation, or economic slowdowns, demand rises. Traders who understand this can anticipate periods of rapid price movement, while investors can see these metals as a store of value to preserve wealth. Unlike fiat currencies, which can lose purchasing power due to inflation, gold maintains its value over decades, making it a reliable hedge. Now let's connect this to crypto and tokenized gold. One of the exciting innovations today is tokenized gold on blockchain platforms. This combines the stability of gold with the speed and flexibility of crypto trading. Tokenized gold can be used as a medium of exchange, store of value, or unit of account, unlike Bitcoin, which is highly volatile and less practical for day-to-day transactions. Essentially, you can now get the benefits of gold, its long-term stability, while still trading it in the fast, liquid, crypto-native environment. So, if you combine central bank buying, geopolitical trends, and tokenized gold on platforms like BitGet, you see a market that's robust, liquid, and full of opportunity. Short-term swings give traders actionable chances to profit, while long-term trends give investors confidence that gold and silver will continue to hold value. Knowing both angles, short-term trading and long-term fundamentals, makes you a much smarter participant in these markets. In short, central banks are quietly shaping gold's future. De-dollarization is driving demand, and tokenized assets make these opportunities accessible to modern traders. If you understand these forces, you can make informed decisions, whether you're swinging trades over days or holding positions over years.